Another example, a company records items on the cash basis and needs to convert to an accrual basis for the year end. Cash basis net income is 70,000. Start there. And then we need to figure out how do we adjust each of these items. I'm going to start with the revenue-based adjustments, which is going to be the changes in unearned revenue and the changes in accounts receivable. I see unearned revenue increased by 200. So this means that the company received cash, included that in its revenue, but didn't actually earn any revenues. So I'm going to get to accrual, I'm going to subtract out the increase in unearned revenue. That was included in this 70,000 net income, but will not be included in my my accrual based income. Accounts receivable went down by 800. This means that the company collected more cash than it had actual revenues. So the cash increased the cash basis net income, but it related to prior year's revenues. So we need to subtract it out because the revenues were cash was included in the cash-based revenues, but they would not be included in the accrual-based revenues or income. So subtract out the decrease in accounts receivable. And then for expenses reduced net income here. Accounts payable decreased by 2,000. Accounts payable would decrease because more cash was paid than the expenses that were actually incurred. So our 70,000 here was reduced by 2,000 for those cash payments to a previous period, but we didn't have the offsetting expense. So I need to add back to try to reverse or undo that decrease in accounts payable. And wages payable went up 100. Payable goes up because we had an expense that was more than our cash payment. So this 100 was not included in our net income. So we need to include that expense by subtracting it out of this cash-based income number. Subtract out the increase in wages payable. And we have prepaid rent went from 1,200 to 1,500, an increase in 300. So the cash must have been paid to increase the prepaid rent. That lowered our 70,000 net income, but it didn't affect an actual expense. So I'm going to add back the increase in prepaid rent. And I'm going to get accrual-based net income of 71,200, which is choice D.